What is going on, investors? Hopefully you guys are having a wonderful new year. Welcome to the EV Stock Show, where every Saturday here on the Investor Channel we'll take you around the world of EV stocks. We'll recap all the news of the week, and this week we've got delivery numbers from NIO, XPENG, Li Auto. We're anticipating them this week from Tesla. We'll likely cover that on our Friday FANG Stock Recap show and also next week on this show as well. Run down a little bit of other news. We've got some CES news on the horizon that is coming up this week. We'll also do something a little bit differently on this show. We'll actually look at smaller cap companies. I get a lot of requests to cover companies that are not your mega cap tech stocks. Well, this show will talk a lot about smaller companies in the EV space that could potentially become much larger companies. And we'll actually look at one today. We'll look at the financials. And then towards the tail end of the show, we'll look at the technicals from all the mega cap companies in this space. So the Tesla, the Fords, the GMs, the NIOs, and right now, Lucid and Rivian. We'll talk broadly about those stocks as well. Now, before we get into that, what I do want to just talk about is a little bit of investor philosophy, okay? We'll get into the news here in a moment, but what I want to remind you of as a great investor is you're looking to surround your portfolio and build your portfolio full of gold medal winning stocks. And this last year in 2021, I don't think there was a better example of a year where silver medal, bronze medal, contending stocks absolutely started to tank. After the month of February and March, pretty much all unprofitable tech, speculative stocks took an absolute nosedive, and stocks like Nvidia, stocks like Tesla, even stocks like Apple, stocks like Amazon, stocks like Google, they all performed or at least held up very nicely, especially when you compare it to the Teladoc Health, quite frankly, the Cathie Wood stocks out there. So when we're looking at the EV market, we're not going to break form from that. Just because we'll be talking about startups and small cap companies doesn't mean we're going to invest in them. They could potentially become gold medal winning stocks. Now, right now on the manufacturing side, it is a clear cut. There is only one winner, in my opinion, in manufacturing of EVs. This is actually making the cars that you sit in and drive. The only gold medal winner right now is Tesla. Now, there are other contenders, and we'll talk about the delivery numbers in a minute from the Chinese automakers. That's NIO, Li Auto, and XPENG. Now, you have to be comfortable with investing in Chinese companies. You look at the stock of like Alibaba and Didi and other companies out there that have absolutely tanked this year. And so there's a lot of investors, myself included, that just simply won't invest in pure play Chinese companies. And so you have to be comfortable with those stocks. But I would say those stocks are still likely contenders in that space. Now, you have Ford, GM, Mercedes, Audi, VW, Toyota, Honda. The traditional automaker will eventually start making some EVs at some significant numbers. I think this upcoming year, and more likely 2024 is when we'll see these companies really start ramping up production. But right now, they are second place when we talk about a pure play EV space. So if I were to build a portfolio today, the vast majority of that money is going to go into Tesla, and maybe I sprinkle a little bit of dust on the contenders. Now, the startups, Lucid, Rivian, Fisker, Arrival, Canoo, Nikola, Lordstown Motors, Workhorse, these companies are fun to look at, and we will certainly analyze them here on the channel, but I would not even touch any of these companies from an investment perspective, but that can change, okay? Because I've been investing since the dot-com age. There were stocks, quite frankly, during the dot-com age that I might not have invested, maybe in Amazon, maybe some other companies, maybe even Apple. I wouldn't have invested in them, but as those companies mature and they get better, they do become contenders, and they do potentially become gold medal winner stocks. And that is when we tend to pour our money in these stocks. So I just want to talk about that from a philosophy perspective. Also, what I want to talk about too is the EV category is really broad. Okay, we see the Teslas on the road. Occasionally we see another EV car on the road, and that's kind of where our attention goes. But what I want to talk about is charging. I think if EVs are going to be as prevalent, and these automakers keep saying by 2025 or 2030 or whatever year they decide to throw out there, they say their entire fleet's going to be EV. Well, how the heck are you going to charge that thing? Okay, yeah, you can plug it in at home, okay, but what about when you're on the road? Where are you going to charge that thing? There's gas stations on every corner of this country, and there's not from the EV perspective. So there's going to have to be major, I mean, we're talking major buildup of charging. I actually think that's the category I'm the most excited about, because other than Tesla, so I think the crazy thing about Tesla is they not only hold a gold medal in the actual EV making of the drivable cars, they have a gold medal when it comes to battery technology, when it comes to software, when it comes to autonomous vehicles, but also charging as well. When you look at the amount of chargers that they have out there and the availability of those absolutely are holding a gold medal when it comes to charging. That is why we will hold Tesla at such high regard when we're discussing them. But I actually think the charging space is going to be so big, there's going to be other companies that are going to be able to win a gold medal, okay? And we have other companies in the contending space, EVGO, which we'll talk about here on today's show. We'll actually look at their financials. We got ChargePoint, we've got Blink Charging, which I think we've done a video here on the channel. You also have traditional oil companies, Shell and BP. They're investing in this space as well. They obviously have all the locations already, and so it wouldn't surprise me if a Chevron, a Shell, a BP basically starts converting their gas stations into, at least a portion of them, into EV charging. That would make a lot of sense. I think this space has the greatest opportunity probably over the next 3 or 4 years. And certainly when you look at the valuations of the charging stocks, not necessarily the traditional oil, not necessarily Tesla, but when you look at EVGO, ChargePoint, Blink, and the other ones, I tell you what, they're not really crazily overvalued from a market cap perspective. Now, there's other segments. There's batteries, there's software, there's autonomous driving, there's delivery, there's drones. This sector is really big, and that's why I wanted an entire show devoted to it, because right now we have one gold medal winning stock, and that is Tesla. But I think this sector is so big, you're likely to have 2 or 3, and if you can add those companies to your portfolio at the right time, I think you could set yourself up for the next 10, 20, maybe even 25 years, right into retirement for a lot of you. That would be absolutely fantastic. Now, Tesla is forecasted to top the 2022. So we're talking about, now we're in 2022 as you're watching this. So we're talking about the upcoming year. They're expected, and it's not expected, it's almost guaranteed that their delivery expectations will exceed all other EV makers likely combined, because we have Gigafactory Texas more than likely coming online in the first quarter, I believe. And we also have Giga Berlin, which I saw some rumors that they're already shipping. They're not shipping and delivering vehicles out of there, but we're seeing test vehicles start to roll off the line. We also had German regulators indicate sometime in Q1. Now they said it was in Q3, and then they said it was Q4. Now they're saying Q1 of 2022. They're going to approve that factory and actually get it rolling. I tell you what, bureaucracy in Berlin is as thick as it here in the United States, but it looks like Tesla will actually get 2 manufacturing plants online. They already have the Fremont plant here in California, and they've got one in China, which they are continuing to expand. And so Tesla's going to be so far out in front of the rest of these companies. Loop Ventures is predicting that this company is going to do 1.2 million to 1.3 million vehicles in the upcoming year. When we see Tesla deliveries, likely maybe even later today, or possibly, my guess is maybe Sunday or Monday, or maybe even Tuesday, they put it off until then, we'll likely see Tesla in that 700 to 800,000 vehicles this year. So they're expected to do about 45% year over year growth on that. Now, Rivian is expected to do 42,000 deliveries, and Lucid is expected to do 22,000 deliveries. But Loop Ventures, including myself as well, is highly speculative on that. I would be absolutely shocked if either of these companies get to that mark. It would take significant amount of investment, and I would say a little bit of luck as well from a supply chain perspective and just a delivery perspective. It's going to be difficult for these companies. We often look at Tesla as the example, and they had a slow ramp up. They had lots of hiccups along the way. I actually think if you're going to look into the space, like I showed you on the first slide, I'd rather focus on the contenders, the Fords, the GMs, the Mercedes, the Audis, the VWs, the Toyotas, the Hondas, the traditional automakers already, NIO, Li Auto, XPENG. If you're comfortable with Chinese companies, we'll talk about their delivery numbers here in a second. But right now, Tesla is so far ahead of these people from a capacity standpoint, an ability to deliver standpoint, and just a branding standpoint. It is just absolutely phenomenal. And that is the company I would center around when we're talking about manufacturing. Now, speaking of manufacturing, Li Auto's December deliveries came in. They delivered a little over 14,000 cars. For the Q4, they delivered 35,000. So that gives you a little bit of idea. In a quarter, Li Auto's doing 35,000 cars. Tesla is doing nearly 250,000 in a quarter, okay? And so it just shows you there's just such a large gap between the companies. And look, Li Auto in a quarter is delivering more than what Rivian and Lucid are going to do in all of next year. So that's why we put the Chinese automakers ahead of them in terms of our contenders category. And quite frankly, Lucid and Rivian, even though their valuation is absolutely astronomical, they're still a startup and highly risky investment. We'll look at it from a technical perspective as well, risky from that perspective as well. Now, 2021 total deliveries went up 177%. So it just shows you there is a strong ramp up in these companies. And since they are delivering cars, it is affecting the stock price as well. XPENG delivered about 16,000. You'll notice with all these companies, Li Auto, XPENG, and NIO, they're all delivering in that 14, 15, 16,000 car range. It just still shows you the tremendous, I think Tesla's doing like over 50,000 cars in China. So it just shows you how much Tesla is even ahead of companies that they compete with in their own region. That gave XPENG total deliveries in Q4, 41,000 cars. Again, that's more than what Rivian and Lucid are planning to deliver all of next year. This is just in Q4. What XPENG did, that was a 222% increase over the year. Now, the stock with one of the highest market caps of this group is NIO. They delivered actually the least amount of cars. They delivered 10,489 cars in December. Q4 deliveries, though, were up nicely, up 44% year over year to 25,000 cars. That gives us their total deliveries in the year. They had issues in Q4, and I think NIO was starting to switch some models as well around, and so their Q4s were down. But when you look at the total deliveries for 2021, NIO does lead the way, so it does make a little bit of sense from a market cap perspective, up 109% year over year to a little over 91,000 vehicles over at NIO. Now, analysts are starting to line up and say that EVs need to prove themselves as an execution year in 2022. And I think many, including Rivian and Lucid, are likely going to come up short from an expectation and an execution perspective. Now, will investors give them enough leeway, enough rope? It's possible, okay? The market sometimes does things differently. Look, there's been people on the bear side of Tesla for over a decade saying that this company is not meeting expectations. This company is not, from a valuation perspective, is wildly overvalued. So there's always going to be those people in the market. But when we start this EV sector is way more mature now. It's not a mature sector, but it's way more mature now in 2021 and 2022 than it was 10 years ago when Tesla was just getting started. And so I don't think investors are going to have as much patience that they did with Tesla as they will with maybe Lucid and Rivian. We certainly look at other sectors. Look at the e-commerce sector, okay? Amazon just dominates that sector. Well, investors don't have as much patience when it comes to eBay, when it comes to Etsy, when it comes to maybe a little bit Shopify, but they don't have as much patience when you look at the other e-commerce plays, okay? They have plenty of patience when it comes to Amazon, and that's why I think we'll see this year as a critical year, like analysts are saying, that these companies like Lucid, like Rivian are promising mega deliveries, and we're seeing the Chinese automakers start to deliver. We'll likely see Ford and GM start to deliver in this sector as well. It will be a key year. That's why I think this show will be an entertaining one to follow. Major US brands decide to ditch CES. That's the Consumer Electronics Show. That's in Vegas, and I believe it starts next week. Now, they're not ditching it for any other reason that the COVID-19 cases are starting to spike, and I don't blame anybody that wants to skip out on this event, okay? There will still be an event in Vegas in person. There'll still be a lot of news. And so this time next week, we'll see a lot of news, okay? Remember that a few years ago, Sony actually presented a concept car. BMW is expected to bring color-changing body panels to the event. That's interesting. And obviously, I think the headliner is this Silverado 1500 EV, which, man, if they can get this on the road, this will be a wildly popular car, okay? And in this case, a truck. So if Chevrolet will announce this, they'll get a ton of fanfare. They'll get a ton of attention from this. Likely even the president of the United States will try to bring attention to this as well, since he's very closely tied to the union-based automakers here in the United States, which is, for the most part, Ford and GM and a handful of other ones. So CES is next week. On next week's show, we'll talk about some of the things that are revealed. Obviously, the big guys like Chevrolet, BMW, maybe even Sony are releasing maybe an update on their concept car, but a lot of the little guys as well, some of the micro-cap companies, they'll look to make a splash as well next week. Now, electric vehicle roundup, Tesla, Rivian leads as traditional automakers plan 13 U.S. battery plants by 2025. I talked about this on our FANG Stock recap show yesterday on Friday, and here are the 13 EV battery plants that are planned. So you have Ford. They're planning to open them by 2025, 2026. But in the age of supply chain, in the age of the health situation that we're in, I would be shocked if these get opened during the time that they expect it. Look, we see with Tesla constantly being delayed, and they have done this several times, okay? And so I would actually expect these, first of all, they're not going to open up early. I'd be actually, it'd be surprisingly shocked if they do. More than likely, you're looking for maybe another year or two added onto these. So it just shows you how much behind all these car companies are. But when you look at this list, okay, you have Ford, General Motors doing Ford, SK Innovation is kind of partnering with Ford, and then you have some others, Toyotas and Volkswagens down here. What don't you see on here? The speculative companies, because they don't have the money, they don't have the capacity, they don't even have the need yet, okay? They're not even delivering that many cars. And so the traditional automakers are going to take a leap over what we'll refer to as kind of the speculative automakers, and this is what I think is going to kind of shake out over 2022 and 2023. Investors are going to start to realize that the traditional automakers, while they've been very, very slow, like we're talking about a snail's pace to catch up to Tesla, they're not going to catch up to Tesla, but when it comes to battery technology, this is the key component when we're talking about EVs, okay? I think a lot of these companies are pretty good at making software. If not, they can kind of farm that out or third party that. They can all stamp steel. They can put rubber on the tires. They can put the cars together. It's the battery technology, especially at scale when we're talking about 50, 100, 200,000, a million vehicles in a year. You need so many batteries, and this is where these companies are going to start to catch up. But we see the earliest plant is going to come online in 2022. That's going to be from GM, and we're going to see one from SK Innovation, which I believe is partnered very closely with Ford. Arrival, that's actually the name of a company, ticker symbol ARVL. They began proving ground trials on their electric bus. Now, we're going to see a lot of this in the EV segment. We're going to see companies like this Arrival company. So here's their EV van, here's their bus, here they have a car, they have some software, they have this Mustang, which looks ridiculous. It's like $400,000 or $500,000. I mean, gosh, if I had that kind of money, I like Mustang, would be pretty cool. They got this robots. In my opinion, this company is trying to do too many things. They should pick a lane, just like Tesla, okay? Tesla picked a lane, picked a roadster, put that on the road, and then they went to another car, put that on the road. Then they went to another car, put that on the road. A lot of these companies are trying to be Tesla today, where Tesla's fooling around with robots, Tesla's fooling around with other stuff, maybe even a phone at some point. I don't think these other companies need to do that. So when you see this, when you see a startup company, and look, this company's stock is only worth about $7. The market cap's $5 billion, which is probably wildly overvalued when we look at the financials of this company. When they're doing all these different things, it means they're doing none of it well. And so I would tend to avoid the companies like this that have this kind of scatterbrained idea, but it will be interesting to see if these companies. Now, what I will say about the EV space is when you're going something like the bus route or certainly the delivery van route, but especially the bus route, you're dealing with municipalities, you're dealing with government, you're dealing with government spending, you're dealing with that, and that order process is way, way slower than when you look at delivery vans and certainly consumer vehicles as well. So these are companies I would put on my back burner. More than welcome to monitor these companies, but I would put them on the back burner. Now, Nikola, it's almost like a four-letter word when it comes to EV. This company has some really, really bad reputation. And quite frankly, you couldn't have gone a day without at least 2 or 3 YouTubers posting a video on this stock. Just last year, this company was up at over $70 per share. Now we're talking about $9, under $10 per share. Man, you go back and look at how people were tooting this company up and talking about how great it was. This is absolutely a learning lesson for so many of you that I just would not touch these startups. And again, I identified a lot of the startups, the Lucids, the Rivian, the Fiskars, the Arrivals, the Canoes, the Nikolas, the Lordstown Motors, the Workhorses. A lot of these stocks have already gone down into penny stock territory. And in my inflated, some people think penny stocks is under $1. Look, inflation was like 8% this year. Now I consider any stock under about $10 essentially a penny stock. And Nikola has just really gone down tremendously, but they delivered their first EV truck delivery today. So that just goes to show you, I would wait on all these startup EV stocks. Wait until they start delivering cars. And even after that, I would just wait, because we'll look at Li Auto and XPENG and NIO. These companies are delivering nearly 100,000 cars in a year, and it still looks like you can wait on that. Now, the segment in this space that I think there's enough gold medals up for grabs is charging. And EVGO is interesting because they were singled out as an EV sector winner in 2022. That was from a green fintech firm called iClima. I've never really heard of them, and they could be being paid by EVGO to kind of pump this up. But we'll look at their financials in here in a second. But here's what I wanted to talk about is the company has revenue estimates, and it looks like they'll meet this target of about $20 million this year. So the company has $20 million worth of revenue. Their market cap right now is $2.4 billion. Now, but here's the really interesting thing. The company is projecting to have $900 million in just 4 years. They're talking about revenue, $900 million worth of revenue by 2026, and actually positive EBITDA of $331 million. I tell you what, if they're able to reach that, a $2.4 billion valuation is probably going to be absolutely a great value when we're talking about this stock. Now, EVGO focuses on kind of the fleets. So your Uber drivers that might need something, maybe like an Amazon that needs lots of chargers. Really interesting that they're going after that market. You're looking at UPS, DHL, FedEx. A lot of these companies have large fleets, and they're going to need charging that, is a little bit different than from a consumer perspective. So I think there's absolutely going to be a gold medal up for grabs when we're talking about fleet charging. So your Pepsis, your FedEx, your UPSs, the companies with lots of cars that rely on charging them, well, they're going to take them back to their facilities and charge them. And a lot of these companies are not going to want to do the investment in that. What I think is going to happen in this is a company like this is actually going to get acquired. So, and one company that I could see buying them is something like Amazon, because Amazon sells everything. Okay. Amazon wants to be the A to Z, and it would make sense that Amazon, just like they've scaled up their cloud computing. Okay. They scaled that up for their business, and then they started selling that to other people. Same thing we've seen in logistics over at Amazon. Okay. They're delivering a lot of packages right now. My guess is in the next year, 2 years, 3 years, the pandemic really slowed this process down. I think we would have seen it by now if it wasn't for that. But eventually you're going to be able to mail packages just like you do with FedEx and UPS. You're going to mail it with Amazon. Okay. And I think the same thing could really make sense for Amazon if they get into EV fleet, EV charging to charge their own EVs. And then they all of a sudden scale that so wide and so big that they can charge other people's EVs. So I think Amazon, I'm not trying to float the rumor that this is going to happen anytime soon, but I actually could see Amazon allowing a company to really do a lot of the early investment. And then when they start hitting that tipping point in terms of locations and maybe from a profitability perspective, I could see them making a play from an acquisition perspective. It would just make sense that Amazon would want control of that whole vertical stack. You could also make the same argument for a FedEx, a UPS, any number of businesses that run a large fleet of vehicles. I could see them making an acquisition in this space. Now, in the same sentence that we say EVGO got singled out as a winner, while other analysts are saying, including Needham, saying that they started lukewarm coverage of this. And the reason why is Needham breaks up their financials. And when we look, this is EVGO's most recent financial segment. And we see in the most recent quarter, they did about $6.1 million worth of revenue. Now, where we draw the line here on the investor channel are companies that have negative gross profit. And here's the interesting thing about EV is, so we see their revenues are at $6.1 million. Again, we're looking at EVGO, which is ticker symbol EVGO. And this company did $6.1 million in the last 3 months. For the last 9 months, they did about 14.5. With the analysts are starting to give them credit for about $20 million worth of revenue in the full year. That makes a lot of sense. Now, unfortunately, the cost of sales over at EVGO exceed our revenue. So that means this company has gross profit. They're basically charging these vehicles for free. But one thing that I noticed here was that they are recognizing a fair amount of depreciation and amortization, and that is a non-cash charge that could be for tax purposes. It could be just for some reason they're recognizing maybe a large amount of depreciation up front, and that starts to level out as you go forward. I'm not exactly sure. So it's a little bit different than when we've looked at other negative gross margin companies, including Rivian and Lucid. These companies are just spewing money. This company is not bad, but from a gross profit perspective, off $6.1 million, we lost, again, this is just from a gross perspective, $1.6 million. You factor in that they spent another $20 million. Yeah, $20 million in a quarter. Okay, this is a company that's going to do $20 million in revenue for a year. In a quarter, they spent $20.8 million just on G&A expenses. So this is a company that's absolutely bleeding money. This is why I don't expect an Amazon, a FedEx, a UPS to really invest in this on their own. I think those companies are smart. Let EV and their investors, let them kind of make this investment. Let them spew a bunch of money for a year, 2 years, build it all out. And then if the market cap is around $2 billion, I mean, like Amazon farts that on a bad day. UPS and FedEx certainly can afford that as well. And so I could see this company getting swallowed up at some point once they gather enough market share. And I don't necessarily think regulators are going to be, since this segment is so green and so new, I don't necessarily think regulators will be on its back. But EVGO is an interesting one because they're focused on the fleet. They've got negative gross margins. That means I would not invest in this company, but I would keep an eye on this one because if they can turn this depreciation and amortization around, this company actually is profitable from a gross perspective. Now, their general administrative expenses have absolutely blown up and gotten way out of hand. But if they're able to scale this business up, I think it's worth way more than $2 billion. Now, from a technical segment of the show, we cover Tesla every Friday. This thing's in a long-term uptrend. If we break down below this upper trend line here that I have in, I wouldn't be too concerned. Even if we got back down to about $840, $850 per share, that's where I would expect Tesla to bounce, and I would expect buyers to come in, probably likely even including myself on that one. Now we're looking at NIO. What I've noticed with NIO, now NIO made a monster run, okay? The stock was like $2, okay? And then it rallied hard all the way up to 50, but we've made a series of highs here, lower highs, another set of lower highs. Depending on how you look at technical analysis and your slant on NIO, this is either bullish or bearish, okay? And I mean, look, pretty much every stock can kind of tell you that. But from a technical perspective, this kind of flagging out and this compressing wedge, this tends to break one way or another. And on the upside with NIO, we're looking to get back above the $42 level. Okay, probably more specifically, I'd like to get well above that, probably $44, $45. That will take out this previous set of lows. That will show you that we're likely, maybe this was kind of a whole bottoming formation and we're going to move back to the upside. If you want to be ultra safe on this one, you wait until you take out the highs up here at $60 per share, because I would expect sellers to step in up at this $60 range. Now on the downside, I mean, you're looking for it to break right where it is right now. Okay, this stock is like teetering, like literally teetering on an edge of support, but it's where it's bounced. Okay, the $31, $32 with NIO, we bounced here like 3 or 4 times over the last, really over the last year or so on this stock. So you'd expect it to bounce, but if we don't get above the previous highs, well, this downtrend, this upper trend line that I have trending down here, well, that's still intact. And quite frankly, it's still intact until it doesn't say that it is. Now, Li Auto, ticker symbol LI, this one's flagged sideways. We're in a pretty tight range between $26 and $36 per share. I wouldn't get excited about this one until we broke above 36, probably more specifically above 38. That would put this area back up in play. We could run from 38 up to 48. I would probably play a short-term trade if you wanted to do that. Now, on the downside, we're looking for a break below 26, but we'd expect this 26 level to probably have some significant area of support since it's acted that way for about a year now on this stock. Now, looking at XPENG, which is ticker symbol XPEV, this stock is making a similar move to NIO, except it's flipped, okay? We actually have overhead resistance here at about $56 per share. The stock's trading currently at 50, but what we are making is a series in the shorter term, a series of higher lows. So we made a low here, higher low, higher low. This is looking actually pretty bullish. I would actually expect this one to get back up into this $56 range. I would expect it to get rejected here because that's what has happened. But if you can break above 56, well, it brings these areas similar to kind of the Li Auto chart. You bring the previous highs back in play. I could see you going from 56 back up and retesting into the $70 range on this one. You could play a shorter term trade on that one. Now looking at GM, this reminds me honestly kind of like the Google chart. Okay, Google bottomed out in March like a lot of stocks and then just went on a tear. Okay, and this stock went on a big monster tear. We had this big monster uptrend, but now we're going sideways. So I'm going to take our upward trend line out, and now we're just going sideways with GM. Okay, investors are kind of comfortable with the valuation that it's at now. The lower end of the range is down here at 49. The upper end of the range, which we're pretty close to, stock's trading about $58 right now. Upper end of the range is around $62 per share, depending on where you want to draw this line. Now, more specifically on the bull case, you've really got to get above $64 on this one to get above these previous highs. You get above these previous highs, well, that could mean that we're just back up. This was just a slight hesitation in an uptrend, and we're going back higher. I would actually expect GM just to trade in this range. I think we're going to be range bound. You bring up a chart of Amazon, a number of different stocks that just, had a big monster run, and then now we're kind of range bound with GM. Now, moving on to Ford, this one looking really, really good. This is probably the most bullish chart out of them all. We are in a mega uptrend. We had a slight hesitation back in August or September. We actually broke this trend, but when you break these upper trend lines and you get back into them, it's incredibly bullish, okay? And then I have another line overhead here that if we stretch this chart out, those were the highs back in 2013, 2014. So we broke higher than that. That is incredibly bullish as well. Right now, Ford, if you own Ford shares, you're just letting them run. Honestly, if you want to lock in some gains or you just want to make sure you don't, this thing comes crashing down to a certain degree, well, you're setting a stop loss right about 18. I would set a stop loss actually probably underneath these highs, probably $16.50, $16.17, maybe even $16 at the lowest, because if you break through this area of what was really a hard level of resistance, I mean, notice when we peaked out here at 17, I mean, it was like 2 or 3 years of just going down, more than that, like 6 years of just going down and down and down. and now we've just broken up above it. So Ford's got a lot of momentum, not only in their product line, but the stock chart looks really nice as well. Now Lucid, it's got a massive, I mean, we're talking about a massive valuation. This stock chart was in a nice sideways consolidation between about 17 and 34. Now, when it broke above 34, this is why on the show, we're always looking for stocks that break to the upside, because when you broke above 34, you retested, or you came very close to retesting these highs that were at about $63, $64. We didn't quite make it. We got to about 58. So we have a high, and now technically in the much longer term, a lower set of highs, and we got rejected here. We're looking, key level for Lucid is about $34, $35 per share, depending on where you want to draw this in. The stock's sitting at 38. So we would expect the stock, and you actually see it in the very, very shorter term. You see how these candles are starting to flatten out. This is a key level, okay? If the stock can hold this level, I've got a shorter term uptrend here, lower set of highs, higher set of lows here. This stock is in an uptrend. If it can hold this, I would actually expect it to go up, back up into the $46, maybe even $50 range on this one, maybe getting rejected somewhere up here in the $50 range. But if we break below 35, incredibly bearish, okay? Incredibly bearish. You're likely coming down into the 20s, honestly, on that stock. Now, finally, last technical chart we'll look at is Rivian. I'm going to switch this to a 1-hour chart because this stock has just recently went public and you don't got a lot of candles on it. What I wanted to show you, though, very much from a technical perspective, we created a really kind of blow off top up here at about $170 per share, but now the stock has consistently been going down, rally, down, rally, down, rally, down, rally. I mean, we're creating a very, very predictable pattern here. And it looks like to me, if this stock continues that pattern, it's going to get rejected here at $100 per share and likely headed lower. But we are wedging out a little bit, okay? Lower set of highs, lower set of lows, could be making a lower set. Really, to be confirmed that this one's going higher, you need to get above the previous highs, which right now technically are down here at 107. There's a group of highs here at 107. You get above that, I think you got a high probability of coming here to 114. You really would want to get above this cluster of trading, okay? Because look at how many candles are in this box right here, okay? There's a lot of candles, and I know this is a 1-hour chart, but there's a lot of price action between 115 and 120 on this one. So there's going to be a significant amount of overhead resistance. You get above that, though, boy, this stock could get, quite frankly, it wouldn't shock me if you got all the way back up to the 160s, 170s. So from a fundamental perspective, I would not touch Rivian, Lucid, probably all the Chinese automakers as well. But from a trading and technical perspective, they all paint a little bit different stories on that. Now, hopefully you guys enjoyed today's show. That was the EV Stock Show. We'll be back every Saturday. Leave me a comment down below if you have any suggestions, any comments. I'd love to hear from you. Good luck with your investments.